Hello, everybody. Welcome to today's webinar brought to you by Wellford in collaboration with RHB Investment Bank. The webinar title today is Trade What is Moving 2026 Outlook and Identify Your Next Warrants Opportunity. So, my name is Choo. I'm very honored to be invited by RHB to be a guest speaker in this session. So in this event, we'll have two speakers. So I will begin first to share with you what is my perspective of 2026 outlook, followed by Ms. Vanessa Tong, who is a warrant specialist from RHB Investment Bank, to share with you how to leverage structured warrants to gain tactical exposure, whether it's a bull market or bear market in the stock market. All right. So here is what we're going to cover in this session. We'll begin to talk about the US economy and market review. We'll talk about the global commodity performance very briefly. We'll talk about Malaysia economy review. Then we'll talk about the fourth quarter 2025 Bursa sector performance. Then we'll proceed to market risk and strategies. So today I have a lot of slides, so I have to go through some of the slides pretty fast, especially the economy data. So I will slide through the slide to give you a recent updates of the data. I won't go deep into that, but when it comes to the sector performance, that's where we will spend a bit more time into talking about the Bursa performance. All right. So as usual, disclaimer, whatever we share in this session is only for educational purpose. So in no way that we give any recommendation for you to buy or sell any listed securities that we mentioned here. If you decide to make any investment decision, you're solely responsible for all your investment risks. Okay. And personally, I'm also not a licensed investment advisor, so I can't provide investment advice. Okay. Now, briefly, what is the macro environment, especially in the US economy and market? Okay, for the US GDP growth rate in the third quarter, they record about annualized 4.4% in Q3 2025. So this is the strongest GDP growth since Q3 2023. So American market is still looks pretty hot. Okay. For the US manufacturing PMI, it inched up to 51.9 in January 2026 this year, virtually unchanged from December 51.8 and broadly in line with market expectation. So despite the slight uptick, the index continued to point to the second weakest improvement in the factory business conditions since July, as employment growth slowed to a 6-month low. Okay, so manufacturing still expands in the past quarter and leading into 2026. But the ISM non-manufacturing PMI is even more important because America is a service-oriented economy. So for ISM PMI, it actually rose to 54.4, okay, from 52.6 in November. So the services sector actually expand pretty well. So for inflation, it is in check. The US inflation in check at 2.7%, the same in November 2025. The monthly core inflation actually edged up to 0.3%. So so given the inflation is on control, so that gives a bit more incentive for Federal Reserve to cut the rate. So for US unemployment rate, it edged down to 4.4% from 4.5% in November. Okay, so the latest month, December, is 4.4%. Okay, so if you take a look at the unemployment rate since 2022, you see that the unemployment rate slowly edged up month by month. Now it's at above 4%. Is that something to be concerned? Of course, typically unemployment rate will point to the recession, right? The highest unemployment rate is an indicator of possible recession. But I would argue that the recent uptick in the unemployment rate could be due to the automation, job loss due to automation and also AI. Okay, as AI displays a lot of jobs, automation also displays a lot of jobs. So that's why we see the unemployment rate goes up. Because if you look at the other economic indicator, they were still doing pretty well. Okay, PMI is still expanding for manufacturing. ISM services index is still goes up. GDP growth is still doing okay. So so this unemployment rate should could be due to the job losses because of automation and artificial intelligence. Okay, so the US retail sales actually rose to 0.6% month on month in November 2025. This is the largest gain since July. So retail sales is hot. So consumers' confidence, however, fell by 3.8 point. So 10-year bond yield is hover about 4.2% as of 26 January 2026. So the market will closely watch the Federal Reserve for any signals on the timing of the next rate cut. Okay, so generally the market expect 2 quarter point reduction. Okay, in later this year. Okay, so the market price in for 2 25 basis point cut. So this week, of course, they will further digest busy week of US economy data. Okay, for US central bank balance sheet, the Fed officially ended its QT quantitative tightening program on the 1st of December 2025. That's why if you take a look at their balance sheet, right, since the till end of 2025, you see the balance sheet actually expanded a little bit. Okay, it increased to about 6.58 trillion. Okay, so because as of now, as of last month, they already ended the QT. That means they started to uh, uh, stop stop the tightening. Okay, so this is a boost to the liquidity in the market. So generally, the end of QT is seen as a liquidity boost, so potentially can support the risky asset and crypto market. Okay, so this is it's a good sign lah. Okay, ending QT is a good sign. You know, during in the past, when they do QE, right? That's where market boom, right? Now they stop QT already. So despite they do QT, right, the market still boom. So now they stop QT, so it should be a boost in the market. So right now, all the maturing securities are being reinvested rather than removed from the system. Okay, so all those matured are now reinvested. So this will give the bank the reserve to be more ample. So the next FOMC meeting is going to be March 17 to 18. All right. So last year, U.S. market is Dow Jones, the blue chip goes up by about 13%. S&P up about 16 over percent. Okay, the broad market up by 16 over percent. Nasdaq, the tech stocks, growth stock is up by 20 over percent. Okay, the small cap, okay, up by 11.3%. So generally, if you are in the US equities last year, you should be performing, whether you're in small cap, blue chip, or even in tech stocks. Okay, your portfolio should be up. Okay, so is this sustainable? The answer is, if you look at the S&P 500 earnings, you see that the earnings actually keep going up. Okay, the latest data is as of June 2025 lah. Okay, the earnings still goes up as stock market goes up, right? S&P 500 I think breached 7,000 points already. Okay, now retrace a bit to 6,900, but the earnings still goes up lah. So it looks like supported, but if you take a look at the shareholder PE ratio, it is actually pretty high, right? So shareholder PE ratio as of January 2026 is actually at 40 times. Okay, 40 times PE, which is the second highest in the history of the S&P 500. The highest is during the this is a dot-com bubble in the year 2000. Right now it's hovering at about 40 times. Okay, so some investors become concerned lah. Okay, and say that it is it's AI bubble. Okay, AI bubble. But I would think that there are some right now people are pricing in the future growth rate driven by AI, okay, driven by industrialization. Back then, during the dot-com crisis, the share price surge is not so much driven by the fundamentals. Okay, the earnings still lag. Okay, but this time the earnings is catching up lah. Okay, but nonetheless, okay, given this kind of high PE, investors also can be a bit concerned lah. Okay. All right, so this is a small risk, okay, for us to be aware. Okay, the PE is actually at second highest in the entire history of S&P 500. All right, so I briefly talk about the US market. So let's go to the global commodity performance. Okay, commodity now is, especially the precious metal, is very hot, right? So right now everybody's talk about gold, talk about silver. Okay, silver, gold breached about $5,500 per ounce already. Okay, and silver I think breached about $110 per ounce. Okay, due to shortage of silver, and also China doesn't want to export silver. So gold is, the eastern countries are keep buying gold. So the share price, oh sorry, the gold price breached 5,005. And given the geopolitical tension, okay, there's a large fleet armada is marching towards the Middle East. Okay, they are just, I think, 700 kilometers away from Iran. So I think investors are increasingly concerned about potential war breaking out in Middle East. Okay, so gold price has gone through the roof, whereby the other copper also follow through. Okay, Brent crude oil drop, WTI crude oil drop. Okay, so if you take a closer look at the Brent oil chart, okay, it spiked a little bit in the early 2026. It's due to the invasion, sorry, not invasion, blah, uh, the um, the military action in Venezuela, right? So I think the oil price went up. Okay, but long term, right? A 3 year chart is still trending up. Okay, it's still trending down. Of course, oil price coming down may not be good to a Malaysian economy, lah, huh? Because we are more, oil based driven. Okay, due to Petronas. Okay, so government fiscal position could be affected, lah. All right. So if oil price continue downward. So Malaysia's third quarter GDP. Okay, let's look at the Malaysian domestic front. Okay, as of third quarter, okay, Malaysia GDP growth is at 5.2%. But the fourth quarter advanced GDP estimate rose by 5.7%. That's the fourth quarter. Okay, but of course it's advanced estimate, so it's not final yet. So we'll see whether the final estimate can be 5.7 or not. Okay, so it's supported by many. It's expansion across all private sectors, public sectors. So yeah, inflation rate has edged up, to 1.6% as of the latest, okay, latest data, okay, December 2025. Still manageable, okay. So that's why Bank Negara keep our OPR at 2.75%. There's no change. Okay. So 10-year bond yield actually dropped to 3.5%. Sorry, it rose to 3.5%. Okay. Recently in the recent month. Uh, this is everybody, our government, like to talk about that. Okay. Ringgit very strong, right? Against a basket currency, and against the US dollar, we are now about, I think, 3.95, right? Is it today? I lost track. Okay, but we breached, the four level already. Okay, we hover below four level, 3.97. Okay, when we do the slide 3.97, now could be 3.95. Okay, so of course this would be good for importers, but bad for exporters. Okay, so the small cap could suffer because most of the small cap are exporter, right? So as of first MPC meeting for with our OPM maintained at 2.75. If you ask me, I think this year is likely to be maintained for the next 5 monetary policy meetings. Okay, so I don't because I think as inflation is controlled, I guess the OPR should maintain at about 2.75%. So Bursa sector performance review. Okay, so this is where I try to spend a bit more time here. Okay, so FBM QCI, as of the fourth quarter. So whatever I share today, the data here is of Q on Q data is fourth quarter versus third quarter. Okay, so FBM QCI actually rose by 4.23% on a quarter-on-quarter basis. So in October, actually it goes sideways because investors want to wait and see, following the tabling of the budget 2026 on the 10th of October. Now, the budget was actually fis- fiscally disciplined, but the immediate impact was actually neutral because many incentive has been priced in. So that's why it goes flat lah. Okay. So in November, the sentiment actually weighed down by foreign funds outflow and the global uncertainty because the US-China trade tensions and volatility in tech sectors that erupted during that period. So in December, that's where FPNCI went up, right? So it broke the sideways trend to reach the 15-month high, driven by the year-end window dressing, okay, and portfolio rebalancing by the local institutional funds. Of course, could be also driven by the rate cut by the U.S. Federal Reserve in the early December, which improved the risk appetite and strengthened the ringgit. Okay, so domestically, gains were led by the financial services and banking sector and the plantation sectors, supported by the resilient macroeconomic data, which include a very good export data and also a very low unemployment rate in November. At the moment, FBM KLCI is now trading just under the mean of the long-term PE, which is 15. Okay, so this is FBM KLCI right now. Yeah, at this period. Okay, construction sector was down in this quarter. Okay, 9.8%, following the tabling of the budget. So basically, investors were very disappointed by the lack of immediate timelines for the mega projects, and also by the introduction of an expanded SST on construction services. So that's why I think it trend downwards, because the broader SST could actually put pressure on the profit margins and prompt the developers and the contractors to carefully assess the implication. So for this kind of cautious approach, together with a rising building material costs and early monsoons rains in the northern regions, so it contribute to the softening of the sentiment across this sector. Now, despite all these headwinds, major players like Gamuda, Suncon, and also IGM are actually well positioned to benefit, like in my view, okay, because they have a strong balance sheet, they have disciplined project execution and a superior cost control, and in line with the data center team, right? Data center team alone in 2024 accounted for 51% of Malaysia net foreign FDI inflow, okay. So it will continue to create substantial construction activities. So giving all these contractors and developers opportunity and to have potential order book growth. So that is construction sector. Consumer product and services, okay, rose by 4.39%, okay, in the last quarter. PE now is about 18 times. So if you take a look at all this line, I didn't explain the line, right? So these are the simple moving average, you know. So light blue is about, I think it's a 20, 50, 100, and 200. Okay, 20, 50, 100, and 200. Okay, so the consumer products now trade at above all four moving averages at the moment. So it is supported by the strong labor data, steady wage growth, and our continued fiscal support under the economy Madani framework. So the cash assistance under the budget 2026 remain at about 15 billion ringgit. So which a large portion allocation actually shifted from the Sumbangan Tunai Rama STR to SARA. Okay, so which is expected to lift spending on the consumer staples. Okay, so more people will spend on consumer staple because all the SARA comes in, right? So these are free money. So there is 500 million ringgit tourism allocation supported the retail and F&B demand. Okay, so so during in December, I think the sentiment improved based on seasonal year-end demand, because year-end, right? So everybody spend money at Christmas and so on. But in this year, I think, sorry, not I think, blah. So in this year, the sometime in January, there will be a phase two civil servant increment of 7%. So civil servant will have a 7% salary increase. So alongside with a lower RON 95 fuel prices, so this should actually enhance our disposable income going forward. Furthermore, there are a lot of commodity prices that declined since June 2025. So, for instance, sugar price has come down, cocoa price has come down, whole milk powder have come down, even wheat prices has also softened. So, looking ahead, a strong Malaysian ringgit, plus the softer commodity price are expected to support the margin expansion for the F&B manufacturers. And it should benefit the retailers, especially those with overseas sourcing exposure because Malaysian ringgit strength, right? Uh, so overall, the consumer sector remain a defensive play. So we have a very good domestic health, economic growth, low employment. So I expect consumer product sector would be looking okay leading into 2026. Alongside with the Visit Malaysia 2026, it should provide a modest boost to arrivals and spending this year. So there will be a lot of direct beneficiary of from this Visit Malaysia, such as the beverage manufacturers, restaurant chains. Okay, maybe I think recently, I think Oriental Coffee just signed an agreement to become the uh, as Oriental Coffee just signed an agreement with airport or Ministry of Transport or something. Okay, I read the news. So and convenience store operators, okay, could benefit, right? Because when I travel overseas, I also go to all these convenience store. Okay, so this should lift the consumer staples, consumer market, and also help with a higher footfall and also spending. Other consumer players can also benefit indirectly. So overall, this consumer product and services, energy sector was actually down 1.25%. Okay, there are a lot of volatility here. All the while, energy got a lot of volatility, like U.S. sanctions and so on. But in Malaysia, the sentiment is still partially supported by the Petronas 300 billion ringgit capex plan from 2023 to 2027, and the Petros 4 to 5 billion the Sarawak gas roadmap. So so this would support the growth lah. Okay, so if Petronas don't cut the capex, then I think this sector can still be supported. Okay, but of course, capex play is more like very capex play is more crude oil price driven, right? If crude oil price is good, then could spend more capex. But to be more defensive in this sector, you can look into the FPSO or the OPEX based kind of contractors, okay? Because OPEX, whether crude oil price is good or crude oil price is bad, right? There will still be contracts coming in, okay? Right. So for financial services sector, the Q and Q return is 7.97%. Okay, so this is supported by strong banking fundamentals. Okay, um, bolstered by analyst upgrades, attractive dividend yields, and the Malaysian dividend yields are pretty good in the regional perspective. Okay, and also OPR holding at about 2.75%. Okay, so if you take a look at the financial services sector, P is only at about 11 times, but you see the price of this sector is trade above all the four moving averages. Okay, so this is a strong uptrend lah. Okay, so so basically that is the idea. Okay, healthcare sector. Okay, healthcare sector is the worst performing sector in 2025. Okay, of course, if you're holding on to your glove stocks, right? Some investors still hold on from pandemic, right? You should got a lot of losses already. Okay, it's down by 3.27%. Okay, pressured by the the glove demand and also the U.S. tariff. The oversupply issue still persists. Rising costs, including higher energy costs and also labor expenses, actually eroded most of the glove producers' margin. Chinese glove manufacturer expanded their capacity. Okay, so but I think that some of these glove players, I think the base could have formed already now. Okay, I think if I look at the recent glove players quarterly reports, there was some optimism. Okay, so I would think that the worst should be over already. Okay, I would think that. Okay, so despite this headwind, the broader healthcare sector is supported by Malaysia growing medical tourism industry, particularly in KL and Penang. The I think our health ministry target about 3 billion from medical tourism in 2025. So it should provide some tailwinds amid these kind of short-term weaknesses. All right. But the P is still very high, huh? Close to 37 times. This trades, this is the worst sector in 2025. All right. So the next sector is industrial product and services. Okay, it actually rose 1.23% Q on Q basis, right? So there were cost pressures and slower demand. Aluminum price also remained volatile. Um, so um, so it increased the production cost for the downstream manufacturers. China, there's a subdued growth. There are trade uncertainties. So all these factors actually dampen the productions and cause investors to be a bit more cautious leading into this sector. Um, yeah, I think basically it's like this lah. Okay, so I think notably the press metal bucked the broader sector from Q4. The company benefited from the stronger earnings result, okay, and also analyst upgrade, lah, okay. So basically, yeah, that's about industrial product and services, okay. Plantation sector actually rose 7%. Okay, you see they actually trade above all four moving averages. Okay, P is about 15.7 times. So, of course, plantation rose is supported by the strong CPO prices. Right now, the CPO prices actually average around 4,000 ringgit per metric tons. I don't think it can go back to pre-COVID height lah. Okay, 8,000, right? Impossible already. Okay, 4,000 looks like the average in 2005 and also leading into 2006. So, the October actually the growth was boosted by the higher outputs. Okay, and also higher export demand. Of course, in November, the northeast monsoon come in. It caused heavy rains and the waterlogging that slowed the harvest and moderated the output growth. I think if I read, I didn't read all the report by analysts, but most of them remain bullish. Okay, because there's a tightening global supply, and also the Indonesia higher biodiesel mandates, and there are also resilient demand from China and India. Okay, yeah, so that's about it for this sector. Property sector was down 0.43% Q on Q basis. Okay, in October, the sector actually trend lower as the buyers are more cautious heading into Q4. Now, even though the overall transaction volumes and value through the third quarter show moderate growth, but the pace is not so even. Okay, the number of deals actually dipped slightly even as transaction value increased. So value actually goes up, but the number of transaction actually dipped a little bit. Okay. Um, yeah, so that is about property lah. Okay, going flat, right? Property had a good run a couple of years back. Okay, and yeah, so now it's actually moderated. Okay. The REIT sector is one of the best performing sector in 2025. Okay, but in that quarter, Q4 alone is up 1%. Okay, the P is about 18 times already. It's really pretty not low already. Okay, of course, the sector actually rose driven by the rate cut in July. Okay, um, investor actually tilt towards all these defensive counter during this tariff period. Okay, people want to park their money in a safe place. Given US cut rate, Malaysia may move so people position early for REIT. So the REIT has gone up. So the retail REIT and hospitality REIT such as Pavilion REIT, Sunway REIT actually also improve benefit from the consumer traffic, higher footfall into their malls, um, good and rising tourist arrival. I think KLCC Staple Group also achieved a similar kind of uh, benefit, right? So, however, one thing to note, you see, in December it dipped, right? That's because there are uncertainty over the expiry of the REIT withholding tax concession. Okay, as of now, the government still haven't made any statement about that. That means if there's no withholding tax, right? Because uh, so right now the when you buy REIT, the the company don't have to pay tax, right? And then you have to be withheld 10% for withholding tax on the individual capacity. But now the lease, the concession has actually ended. But the market generally expect it to be renewed, lah. Okay, because if it is not renewed, then it will appeal in comparison to the global peer standard. Okay, our neighbor Singapore is actually famous for REITs, right? So S Street would anytime beat the M REIT already. Okay, so I think this has to be extended and renewed. Okay, as of now, there's no announcement yet, lah. Okay, so in the after that, of course, the share price went back up because in window dressing, portfolio rebalancing, and so on. Okay, so Visit Malaysia 2026 could actually improve consumer traffic for hospitality and also the to improve some of the retail REITs. Okay, technology sector is down 3.7% Q on Q. Okay, the PE now of this sector is about 41. Okay, which is pretty high, right? So the technology sector was actually down 3.7%, weighed down by global macro uncertainty, um, forex headwinds because most of them are exporters. So if the company don't do much short US dollar currency contracts, then likely is they will get reduced gain lah. Okay, because as US dollar become devalued, their gains also got capped lah. Okay, so the strong ringgit can pressure margin for all these export oriented players. That's why the sector actually goes down. Okay, so now actually I think that the if I read a lot of the technology counters report, we are entering the AI's semiconductor upcycle. Okay, but Malaysia seems to lag the global peers a little bit in terms of this global AI upcycle. Um, uh, Investors also stay cautious leading into the year end. I think companies with AI link exposure uh, could offer some long term upside. Okay, so because the AI demand boom, the AI demand is actually booming, and it should have a spillover impact to both the front end and the back end semiconductor value chain. So I think despite the near term sector weakness, there should be selective opportunities lah. Okay, telco and media, okay, is down 4% in this quarter. Okay, yeah, because there are a lot of regulatory uncertainty, margin pressure, and also heightened competition. Okay, so investors are still waiting for the clarity involving the 5G dual network. Okay, so in December, the MOF Inc. actually exercises put options on DNB. So it requires the major telcos to acquire the government stake and absorb the shareholder advances of about 300 over million each. Lah. So the DNB losses raise concerns over the near-term earnings drag and the cash flow impact leading into 2026. Okay, so that's the decline in December. Transportation and logistics, the next sector, okay, you see goes flat lah. Okay, marginally increased by 1% Q on Q. P is about 24 times. It is weighed down by the softer container freight rates, higher operating costs, and also concern over global trade headwinds following the new US tariff measures. All right, so yeah, basically go flat. Okay, utility sector was actually down 10%. Okay, P is of 16 times. Okay, so it reflects a very challenging Q4. I say Q4 was, Q2 is doing all right, Q3 is doing all right, Q4 suddenly comes down. Okay, major players actually face the operational and regulatory headwinds. So actually, you weigh on their earnings and the sentiment. So the Naga, for example, have to deal with the ongoing tax and regulatory uncertainties. Malakoff also, one of their plants experienced outages that reduce the capacity payments. Okay, YTR Powers, their overseas earning, especially the one from Singapore, also taper lah. Okay, so that's why the sector actually came down for a little bit. But long term wise, the demand should remain healthy lah, because all the data center require power, right? So and power, without power, right? I think the world struggle for power, right? So without power, the data center cannot run. Okay, so I would think that I would think that the short term pullback could be opportunity to add lah. All right. I think of all the data center growth, Tenaga should be a clear winner. Okay, so that's my view lah. All right. Okay, so for sector performance, fourth quarter, okay, the worst is actually utilities, down 10%. Okay, financial services is the best performer, up close to 8%. Okay, for index Q and Q performance, FBM KSI is the best performer. Okay, mid cap and small cap is actually down 5%. All right. So if you take a look at the whole year, okay, sector for the whole year, healthcare is the worst performer. Okay, up down by 35.8%. Plantation is the best performer, up by 8.84%. Okay, REITs is the second best performer, up by 8.21%. Okay, financial services is up by 2.78%. Okay, index performance, okay, FPM KSF for the whole year up 2.3%. Mid cap is down 11%. Small cap is down 12%. Okay, because ringgit strong, typically will benefit the banking sector. Every time our ringgit is strong, then FMKSI should be lifted. Okay, but ringgit is strong means the exporter will do bad lah. Okay, so the mid cap and small cap suffer. Okay, so despite foreign institutions are the net seller for the whole year of 2025, right? Foreign institutions are like, 12 months, right? 11 months they're selling. Only 1 month there's a net inflow only from foreign institute, right? So 11 months are net sellers. So even though they are net sellers of the big cap and the mid cap, right? FBMCI still go up by 2.3%, all right? So basically, that's about the sector review very quickly. Okay. So right now we want to go into the market risk and strategies. Okay. Now 2025 is very volatile, right? It 2025, it was a tariff year, right? When Trump went into the office, then April Liberation Day, then it shook the whole world. And besides 2025 being a tariff year, it also an AI year, right? So AI is a boom, so turbocharge a lot of AI related stocks. Okay, but it ends with the Soviet China Japan ties. Okay, our Japanese Prime Minister Sanai Takaichi, okay, said that Taiwan issue is equal to a Japanese issue. So China calls for boycott, ban their import, ban their seafood, okay, and stop exporting critical materials to them so they can, which they are required for automobiles industry. So so the supply chain got cut. There were no Chinese tourists. Okay, I spent about 2 weeks in Japan. I travel about 5, 6 cities in Japan. I hardly meet any Chinese tourists. Okay, when I see people speak Mandarin, they are from Taiwan or from Hong Kong. Okay, I hardly see anybody from mainland China. So really, okay, they really hit the government's advice not to visit Japan. Okay, so tourism sector. So the Prime Minister will dissolve Parliament and call for a snap election in early February. So the campaign, she campaigned for a tax cut for food lah. Okay, but investors are concerned whether it could further restrain their fiscal position because she never make it clear how if she cut a tax on food. So where can the government source the supplementary income to replace the lost income, right? So the Japanese bond was sold, the Japanese bond yield spike. Okay, so that's how 2025 ended. Okay, 2026 began with even more geopolitical turmoil, right? on the I think 3rd of January, the president of Venezuela was captured, okay, in his home turf, okay, dragged out from his bed and flown by the helicopter and back to the United States and got charged in the New York court, right? So so that's what happened on the 3rd day of January. Then we have the protests that exacerbate in Iran, okay, because the US crippled their economy and they sent the consumer prices skyrocket, inflation went out of control. So a lot of people took to the street and protest, right? Okay, so now they demand Khamenei to come down, and the US warship is now approaching Iran. Yeah, so this is how geopolitical things happen. Okay, and then we have US who wants to acquire Greenland, okay, by force or by deal. Okay, but at the end, President Trump said it's not going to be by force lah. Okay, so so how this, what are the consequences, right? Now of course it benefit the oil stock because Venezuela, the Trump said that the Venezuela oil will be under his control, okay, and he convened a meeting to talk to all the giants of the oil and gas industry. But I think the response is a bit lackluster. Not many people want to get burned again in Venezuela oil because back then, government changes every 4 5 years, right? So back then, some of the players got burned before, but their oil assets are confiscated by the Venezuelan government. But given that, ExxonMobil share price have reached a new high again, okay, ExxonMobil, okay, so it benefit the oil stocks, okay. For Greenland, right, of course, what is the implication? The defense contractors could benefit because the Golden Dome would be, some of the missiles will be built there, okay, to intercept the intercontinental ballistic missiles. So some defense contractors could benefit, especially from the US. Tech companies could benefit because there are rare earth underneath the iceberg. Shipping companies could benefit as the ice melts. So these are some of the sectors that you can look into. All right. So tariff as a coercive weapon, right? Okay, trade tensions remain elevated. Okay, Trump warned Canada that you could face 100% tariff if you finalize a deal with China. So right now, US want to control which country can partner with the other country, right? They also threatened to impose 200% tariff on French wine and champagne after French president declined to join his Board of Peace initiative on Gaza. Okay, so if you don't pay 1 billion ringgit or $1 billion to join our Board of Peace, then I'm going to impose 200% tariff on your wine and champagne, right? Okay, so but even so, I think France's position is still declined. I think UK also declined to join. Okay, so volatility is here to stay. Okay, so if you somebody who love volatility, then you could learn how to use structural warrants or options, right, to have a tactical trades. With Trump in the White House, volatility is certain. Okay, very certain. Okay, but no, Trump imposed 25% tariff on any country doing business with Iran, right? So if this is really imposed, then of course a lot of countries like China would be imposed an additional 25% tariff, right? So, but at the same time, the traders are actually weighing the possibility that the U.S. Supreme Court could rule on the legality of the large part of the trade policy because it could be deemed as illegal. So if the US Supreme Court ruled this as illegal, then it would incur massive tariff refund to the importers. Okay, so I expect to know this outcome somewhere in January, but then they delayed. Now they go to recession, so the US Supreme Court will convene again. I think somewhere in mid of February. So somewhere maybe 20th of February, we may know lah whether this is legal or illegal. Okay, so there are some implication there. Okay, but of course, if they are found illegal, then of course Trump administration will find other ways lah. Okay, to impose tariff. That's what I believe. So criminal probe, right? DOJ opens criminal probe into the Fed chair. Okay, so so this is over his June testimony before the Congress about the central bank's renovation of its headquarters in Washington D.C. about 2.5 billion US dollar. So, of course, Powell say that the criminal what he said. He said the threat of the criminal charges is a consequence of Federal Reserve setting interest rate based on our best assessment of what will serve the public rather than following the preferences of the president. So he's not backing down. But a big question here is whether Jerome Powell will remain on the Fed once his chairmanship ends in this May. Okay, he still have 2 years left as a governor, but his chairmanship will end in another 4 months. Okay, so who will Trump appoint, right? So the attention will turn to his expected announcement of Jerome Powell's successor. So if the appointee is aligned with Trump's preference for aggressive rate cuts, then the dollar could depreciate and devalue further. Okay? So, but if a Trump yes man, let's say he's a Trump yes man, is appointed as a chairman, so the market should panic because they are worried about the independence of the Federal Reserve. Okay? So what happened on the eastern side of the globe, right? China, okay, huge military shakeout, right? So the Central Military Commission's uh, past years, right, they have already purged 3 generals. Okay, right now, presidency purged 2 more. Okay, of course, General Chang Yuxia and General Liu Zhenli were accused of leaking the nuclear secrets to the US. This is according to a Wall Street Journal, but many people believe it is false lah. Okay, it can't be that the top generals leaks all these nuclear secret to the US, right? So according to the alternative medias, okay, that I read, it is there's a disagreement between General Chang and also Xi Jinping. Okay, so this is the biggest purge since Mao Zedong time. Okay, so after the purge of these 2 generals, there's actually no active Chinese generals with any combat experience. So both Chang and Liu at least fought in the 1979 Sino-Vietnamese war, where the Chinese army was actually given a good spanking by the Vietnamese army. Okay, so right now Chinese may have some of the most fearsome army in the world, but all these military equipment actually cannot make up for zero combat experience of the People Liberation Army. So so the army now is now in a vulnerable moment with low morale. I read that the because Xi Jinping made it ambition by the 100th anniversary of the People PLA, they should be combat ready to invade Taiwan. Okay, so General Chang is the one that against the invasion of Taiwan, and President Xi actually wanted it to be ready. So that's from according to alternative media. So with now the purge of this, so there's a clash in terms of ideology and direction. So when there's so yeah, I'm not a military expert, so that's what I got from that. So if the military is with low morale, so I guess there should be no any meaningful military actions in the due course, I believe. So there's a big thing happen in China. So underlying risk is the rising geopolitical tensions. Okay, we are not sure whether there will be a war breakout in Iran or there's a deal, okay, to reach between US and Iran. Japan and China are also in, the Soviet relationship. There could be new scope of tariff if China is tariff for assisting Iran, so there's 25% tariff on China. So there's another tit for tat retaliation, and Europe may not back down from the Greenland. Okay, so there could be tariff against European counterparts. Okay, so so it could cause inflation, okay, and global recession fear because because valuation is pretty high, especially in the US market. And weaker corporate earnings could be a risk to watch out for. Okay, so what is the probability of the US recession? Okay, as of September 30th, this is the data by the New York Fed model. Okay, the odds for recession 12 months from now is 27%. Okay, 27%. But it has come down. It's come down from a peak of 70%. Okay. So if you look at the inverted yield curve, it's no longer exists now. The yield curve is back to normal. This is between the US 10-year yield and the 3 months yield. Okay, it's back to normal. But usually, when the yield curve uninvert, right, it followed by a recession. Okay, so it followed by recession, 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 right? Every time it uninvert, it followed by recession. Okay, now it's uninvert already. Okay, here is the same thing uninvert again. So this is the yield curve between 10 years US Treasury note and 2-year US Treasury note, right? So every time it uninvert, it followed by recession, and invert followed by recession. So now it's also uninvert, but it has so the it's no longer inverted yield curve like it's a normal yield curve right now. Okay, so this is the past data, but not sure whether it can repeat in the future or not. Okay, so it's historical data show that when it uninvert within the next 6 to 18 months, the recession proceed. Okay. Another risk is the midterm election. Okay, so it's happening. Is from the US, right? 3rd November. Okay, is the midterm election. So historically, midterm election often see the president party lose more seats in Congress. That means Republican. Okay, so the opposite would gain control in one of the houses of the Congress. So this is according to the historical data. As of now, the Trump approval rating is declining. Okay, although that he said that these are fake news. Okay, the poly market, the betting market actually predicts 79% chance of the Democrat to take majority control of the House of Representatives. Okay, so what does it mean? So if House of Representatives belong to the Democrat, Senate belong to Republican, so there will be a gridlock in the Congress, right? But nonetheless, usually when the Congress is in gridlock, the market actually perform. The US market perform. Okay, so it could be good for the market. Okay, but leading into midterm, there should be some volatility there. That's why I say tariff will be volatility. Midterm election, prior to midterm election, will be volatility. So if you know how to trade volatility, especially when it comes to warrant or options, there's an opportunity there. Okay. So, portfolio strategy, I think in 2026 can be cautiously optimistic. All right, because US economy remains strong. I think US economy expected forecast to GDP growth will be about 2% to 3% in 2026. This rate cut cycle, Fed is in rate cut cycle, probably around 2 quarter point cuts in this year. This is the end of QT since last quarter, so there should be abundance of money supply in the market. The S&P earnings are expected to grow in this year. So, and Trump's one big beautiful bill and deregulation will also give 100 billion of corporate tax cut and over 100 billion of household tax breaks. So, US market could be lifted. Okay, Malaysia front, the strong dollars or strong ringgit will be favorable for the blue chips, consumer stocks, and those importers lah. All right. So, okay, so I think I overrun my session for a little bit. So, all right, so that's my brief outlook. Again, I I'm not a licensed investor advisor, and most of the time my forecast is wrong. Okay, so this is my that's my review of the market. All right, so take it with a pinch of salt. Right, so without further ado, I'd like to hand over the session to our next speaker, who is Miss Vanessa Tong. Okay, so she'll share with us, how do we use structural warrants to trade the market. Right, over to you, Vanessa.
Thank you so much, Shane. It's okay, don't worry, because all your insights are really informative. And I think this is really important for us to understand the market and to understand and actually you mentioned that we have to be cautiously aggressive for this year, and I have to agree with that. Of course, we are currently at the level of around um, uh, approaching 1,008 points for KLCI. Hopefully, yeah, it will be true. Okay, so today we are going to learn, not to learn, we discuss more about the opportunities that you can actually get from warrants in current market. All right, so as Shane has also mentioned that when there's volatility in the market, there's a lot of opportunities for you to take. Okay, so disclaimer, this is for sharing and educational purpose only. While today's agenda, I'm going to share with you three main parts. So I'll talk a little bit faster, but I'll straight to the point. Okay, so the first thing, we will actually look at the differences between warrants and options, a quick one. Secondly, to track warrant prices using the tools. And last but not least is managing and switching warrants within your portfolio. It's actually first time. This is actually the first time I'll be sharing on how do we actually switch warrants. So stay tuned till the end. Okay, looking at this chart. So this is the chart of 99 speed mark. All right, so there's the white color line will be the underlying share, and then this orange color line is for you to guess whether it is an option or warrant. Okay, so bear in mind, I was talking about 99 speed mark. All right, so yes, so many of you might know this performance of this orange color line is actually a type of derivative that has a bigger, I would say a bigger performance or a leverage performance compared to the underlying. All right, so I will share with you later on, and let's go into deeper about what are warrants and options. So as I actually have mentioned that both of I mean warrants and options, they are both derivatives. All right, so warrants are traded on Bursa Malaysia, and it also provides leverage exposure to shares or indices. All right, and secondly will be options. Options are normally the US options that we have always been hearing, US options, and it's traded on options exchange like US market, and it's used for trading, that's for sure, hedging and advanced strategies. All right, so it's not a textbook answer, but then it's just for a brief understanding. All right, so the similarities between these two products is that they both derive value from an underlying asset. They are called derivative. So in this case, the underlying asset could be shares, index, and so forth, or maybe even commodities. They both have a fixed expiry date. They both also leverage they magnifies the gains and losses because of the leveraging effect. And call options are actually very similar to call warrants, while put options is very similar to put warrants. All right, so this is a model that we actually use for warrant pricing. All right, so we call it the Black-Scholes model. So I mean, it's a very it's a very complicated formula. You don't really use this and actually go and plug in and then calculate on all the warrant prices, because we'll be doing that for you. And that's why in the market, when you see warrant bid price, we call it the fair bid, is that we actually use this very similar formula that some of the options actually use as well, the Black-Scholes model. So actually this is a snapshot from the RHB based prospectus of structured warrants. So for for example, implied volatility is actually a very important element in a Black-Scholes model for us to derive the value. So now you see the similarities and the connection between options and also warrants. All right. So the answer is this is a warrant of 99 speed mark. So it's actually a 99 speed mark call warrant, 99 smart C5. All right. So the hint is that we do not have any options on Malaysian market yet. I mean on single stock. So that in the case of you want to explore on leverage exposure, besides from subscribing to share margin financing, then call warrants or put warrants, all these structured warrants is actually a way for you to have an exposure. So how do we actually look at this chart? So starting from 100 as the beginning point, 99 speed mother share actually gained 65% from June 13 to December 15. So in 6 months span, it actually went up by 65%. However, due to the leverage exposure of a call warrant, right? So it follows the same direction. Am I right? It actually gained 460% in 6 months time. Yeah, so it's a very good I would say it's a very good leverage product for you when it actually moves in the same direction for call warrants. But in the case of, when the market is falling, then you actually have to explore on put warrants instead. Okay, so besides from the local stock warrants, RHB have also issued US stock warrants. So if you would like to have a good sleep at night, but you still wish to gain leverage exposure on the US stocks, for example, Tesla. So Tesla C7 is actually the warrant that's issued by RHB. And then compared to looking at this graph, if we use the same, same way to derive on all these gains and all. Tesla actually gained around like 35% from September to October. So I actually took a 1 month span. While Tesla C7 that listed on Bursa Malaysia and also can be traded in Ringgit Malaysia, it actually gained around 70%. So it's about a double of the performance of these shares. Yeah, so for warrants, you'll be able to see all these specifications like exercise price ratio. Ratio is the one that you don't actually see in options, expiry, effective gearing, and sensitivity and all. So if you'd like to know more about the upcoming US warrants and also our local stock warrants, please scan this QR code and follow us. Sign yourself up for all our email newsletter, and we are going to share with you if there's any new listing or any updates in the warrants space. Yeah, just screenshot and then you can just sign yourself up. All right, so what are the differences between warrants and options? Yeah, so we know that they are both giving you very good gains if share price goes up, move in the same direction. While structured warrants and options, for warrants, we always say that, oh, warrants issuer, warrants issuer. So like, for example, RHB Investment Bank is one of the issuers, warrants issuers in Malaysia. So you actually get to see Macquarie, Kenanga, Maybank, and so forth. They are the issuers of all structured warrants. All right. While for options, there's no specific issuer. They are issuer everywhere, but they are not investment banks. Okay. While second, can investors sell or write warrants? The answer is no. For structured warrants, no, because there's only issuer can do this. We issue this and then you have to buy it from the market. But for options, investors will be able to sell call options or they can actually sell a put option. Yeah, so it's quite free in the option market. Yeah, so that's the reason why when we say options market, then it's a sophisticated product for certain type of investors. Last but not least, the third one would be market maker. So as we are the issuer, for example, RHB Investment Bank is the issuer, we are also the market maker and we provide the liquidity of the specific warrants. So you will see in the market, there will be bid and ask quotes in the market, while for options, it's actually based on the market demand and supply. So there's no fair bid that you think that, oh, I think the fair bid should be 5 cents or maybe $5, but it's actually based on the demand and supply of in the market. And exercise ratio is very interesting because exercise ratio is actually structured by issuer for certain structured warrants. For all structured warrants. So this also caused that structured warrants price at just a fraction of the share. So it's very cheap. Sometimes you will see when Tenaga Malaysia is like it's quite costly at about 14 ringgit, but then the warrants can go down as low as 10 cents or maybe less than 10 cents. Yeah, that's the power of excess ratio. However, for options, it's actually a standardized size. So you see, then you get it. Yeah. So let's go into the live price metrics, which is very important for structured warrants, as this is a price guidance by market makers. So for you as an investor, if you would like to invest in, for example, in the center, IJM, and you want to buy IJM C1K, the call warrant, you can actually use these price metrics that's available on the warrant website, RHB warrant website, to see what is the price of the bid price of the warrants and the ask price of the warrants map. You can actually map it back to the mother share price. Yeah, so with this, you actually have a guide on when to buy and when to sell. So compared to options, maybe you would not have this. You might have to do your own calculation on that, right? But then you would not have a very easy map for you to invest. Yeah, so this is live price metrics. I'm going to show you how do we actually use it. For example, this RHB World website, we have already tools that is built in. So you can start using it. Okay, I'm going to give you a demo on how do we actually filter all these shares and also warrants. Okay, so sectors in play are all these sectors that has been mentioned by Shane beforehand. So on consumer sectors, utilities, banking, construction, and property. Yeah, so I would say consumer, we can actually look into place like Mr. DIY, counters like Mr. DIY, Aeon. yeah, that would be actually benefiting from the STR and so forth to boost them, to boost the share price. I mean the revenue and then the share price. Utilities, we'll be looking more on Tenaga. All right, so I just choose three first. Okay, so banking, recently we actually see very active volume in banking's warrants. It's, I mean, definitely for the mother share, we will see a lot of movement in the mother share, right? As they are actually the one of the KLCI components stocks, then we'll see, wow, that's a lot of uh, people trading, right? But for warrants at the same time, they are also the top traded recently. Okay, so now we are on the same page, which is RHB warrant search. Okay, never mind. Let me just search for you. So just click on toolbox warrant search. You'll be able to land yourself to the warrant search page over here. Okay, never mind. I use this one. Yes. All right. So I'm going to show you those top traded. Like for example, today, public bank C2C, Maybank C2F, they're actually the top. I mean, number one and number two, and number four as well, is a banking stock, CIMB C2J. So they are all traded like near to 10 millions or more than 10 millions units. Yes, and so we actually see a very high traded volume in it, means that people are buying and selling warrants. All right, so why do they do that? If you compare the price of the warrants like 10.5 cents, 17 cents, compared to, you know, the mother share price, then it would be just a fraction of it. Okay, so as we mentioned, we can actually look into Mr. DIY, Mr. DIY and also Aeon as the consumer stocks. So Mr. DIY C58 and Mr. DIY C51 are both issued by us. But in this case, right, I would say if you have if you are more an intermediate investor, you actually have experience in trading warrants already, then you can actually look into Mr. DIY C51, which is going to, it's slightly in the money and then it's giving you about 5 to 6 times of effective gearing, but the sensitivity is only 2 ticks. All right, it will be very easy for you if you know how to use the warrants price metrics. Yeah, so Mr. DIY 51, Mr. DIY C58. And then you'll be able to compare them side by side. What's the price of Mr. DIY and then what's the price for the warrant? Yes. So besides from that, we go into utilities, like for example, Tenaga C3K and Tenaga C3Q. So that is very powerful thing for warrant metrics is that you can just open this page and then you just go in and you can search, oh, okay, I want to look at Tenaga, I want to look at Aeon, or I want to go for 99 Speedmart. So I can just choose whichever I want and I can compare them side by side in one page. And down there also can. Okay. Yeah. So for warrants, some of the warrants in focus, as we actually link back with to what Shane has shared, consumer utilities banking. So banking, I would actually share with you on CIMB C2J and also public bank C2C. So C2 CIMB C2J would be slightly newer because we just issued it to last week. Yeah, so you actually get to trade it for longer time. The expiry date is on 27th July. But for public bank, public bank C2C, the expiry date will be in April. But even though it's very close to expiry right for now, like it's closer like about 3 months apart, it's going to give you quite a good leverage exposure as well because the effective gearing is about 8 times. Yeah. However, all these numbers, like effective gearing, sensitivity, these are all indicative because if you want a more accurate data, then you actually have to use this website during the market hours because sometimes when we map back to the aftermarket price, then it's a bit inaccurate for now. So tomorrow morning, once the market is open, then you can actually use this website to find out what are the warrants that suits to your portfolio. Okay. Yes, great. Great. Okay, so next, the last two will be construction and property. Yes, never mind. This one I just show you on my screen lah. Okay, construction and property. Okay, never mind. I have one construction stock. It's called Binastra CD. So Binastra CD actually today gained around like 11% due to the gearing effect, like I would say about 5.9 times. And then it's expiring. You still have 4 months to trade, so you have an ample time to trade it. However, there's another thing I would like to emphasize on is that for all types of warrants, right, it's actually a short-term trading instrument. So if you want to trade, be careful to use price metric, and then you have to trade in, I would say, shorter term, maybe days or maybe few hours apart, few days apart. Or if you are really, really um, confident and you are bullish on it, then you can actually trade for longer term. And that is how we actually choose it. You identify the price, you identify the warrant, like the price of Malaysia. Then you go and look for a good warrant that you think is nice, that it's lesser ticks and it's with a decent effective gearing. So it's not too highly geared, or maybe it's not like 2 times or 3 times, because it does not make sense for you if you want to trade warrants with 2 times effective gearing. Yeah. Normally, you can actually go for something decent, which suits your risk appetite. Check on the expiry date. Make sure you don't trade on those warrants that's expiring very soon. And last but not least is to use the price metrics. So it's a guidance for you that you actually cannot go to other website and look for RHB issued warrants price metrics. You can only go to our website to use it. All right. So since I have mentioned on, we don't actually hold on to one warrant for a very long time. That is why we have to know how do we actually switch warrants within the portfolio. All right. So first is switch out from expiring warrants. This is very easy. You know that expiring very soon, but then I still want to have an exposure on this stock. Then I have to too bad, I have to sell it and then have to buy a new one. But the second one will be very interesting, is that to roll profits and keep your leverage, which means that you take your profit first and you keep it, while the principal you actually roll over to another warrant. Okay, so the simple one first, from expiring warrants to newer warrants. So in this case, 99 Speedmart C5 is expiring very soon, expired already because 28 January. Okay, and then you know that I still want to have a bullish, I will still want to have warrants on 99 Speedmart, and then in the market you go and find, okay, I think 99 Speedmart C27 is a very good warrant, because if you compare, right, it has longer expiry for sure. The gearing is at 6 times and it's actually quite sensitive at about 3 ticks, which means that 3 ticks in 99 Speedmart, about 3 cents, it will actually move 99 Speedmart and 99 Smart C27 by half a cent. Yes, half a cent. Okay, 1 tick. So this is how you actually look at sensitivity. So why do we actually want to switch out from expiring warrants to newer warrants? Is that expiring warrants, okay, so for warrants and options, they have also this similarity, is that if it's getting closer to expiry date, then the price, the time value of this warrant is getting lesser and lesser. It's like a car depreciating until zero. Yeah, so since it's expiring very soon, then you know that there is this thing called time decay. So you have to go switch to somewhere else to give you a better time value and also lesser time decay. I mean, slower time decay. Yes. Because as we know that for warrants, right, it's actually we will have to cash settle all these expiring warrants, but not all warrants will be cash settled. That's the main thing. Okay, so warrants, they have different things. We say, oh, there's in the money, out the money, add the money, and all. Okay, it's a bit complicated, but it's not very, because since you are here joining our session, is that is an intermediate session, so that you know that only in the money warrants can be cash settled. In the money warrants, for call warrants, it's like it's when the share price, the settlement price, is higher than the exercise price. So number 2. And then if it's a put warrant, then you have to go with the balik. So you have to go with the other way around. The settlement price is less than the exercise price. Yeah. So the cash settlement calculation will be over here. Okay, to make it easier for you, I actually put on this calendar. So 28 is the expiry date. We take 5 days before. So it's like 27, 26, 23, 23rd, 22nd, and 21st. of January. So this 5 days closing price, we take the average price, and then we'll calculate the settlement price minus off the exercise price and divide by the exercise ratio. Okay, and then you see how many units you have in your hand. But to make it simple, right, I actually have it on our RHB Warrant website as well. For example, for Tenaga C3K is expiring soon. So you go to the warrant info, you click on this green color button. Then this is actually an indicative calculator for you to choose, to play with. So you think that, these 5 days, I assume that it's 15 ringgit. And then I have 100,000 warrants in my hand. So this 11,600, 11666.67 ringgit will be the cash settlement amount. Okay, but this is just indicative and it's for you to have a rough calculation on how much you'll be getting back if the warrants is expiring in the money. Yeah, okay, so it's clear. Okay, so the other thing that I would like to emphasize is that sometimes it's not about expiring warrants or newer warrants, but it's about that, when the market moves so fast. For example, the next speed mark moved from about 2 ringgit plus to 4 ringgit. But if you're still holding on 99 speed mark C5, right, when the exercise price is only 2 ringgit plus 2 ringgit 30 cents and you have made so much money already, as the intrinsic value keeps going up and up and up and up, so it's time for you to switch to another 99 speed mark when the exercise price is at 4 ringgit, which is more relevant to the current market share price. Yeah, so the share price of 99 speed mark maybe it was around like 3 ringgit 80 cents and all. Then the next speed mark C27 will be more relevant for you, and especially for new investors, you go for warrants that has a closer exercise price. Yes, so so you look at these two things, and that is the reason why you have to switch. So whenever people like sharing, telling you that it's time for you to sell, you have to go to another warrant, it's actually true, because sometimes there's no point for you to keep going back, buy and sell the same warrant, even though you have made profit from, for example, C5. But then it will not make sense for you if you keep going in and buy the same warrants, because there are actually more newer warrants that fits to your portfolio, fits to your newer risk appetite, because maybe you become more and more more and more aggressive in market already after you start, investing in warrants. Yeah. So roll profits and keep leverage. How do we look at it? Like, this is an example using Sunway C44. So the entry price, exit price is about 4 cents apart. So from 40,000 gain, 40,000, let me show you. So from 40,000 of capital, the exit value is around 77,500. This is an example, okay? This is an example. It's not guaranteed. So the profit taken is about 37,500 ringgit. So for you as an investor, you keep it because you want to maintain the same exposure. I still want Sunway in my portfolio. However, I want to take profit already. Yeah, so you can just take your profit, like 37,500 ringgit. And for this 40,000 principal that you have invested last time, now you can actually choose to reinvest into Sunway C51. The gearing will be about the same. Maybe it was about 6 times when you actually exited Sunway C44. However, Sunway C51 would have a longer expiry and also a lower warrant price, which is at 8 cents. Yeah, so it will be more relevant for you as an investor. So you can maintain your exposure in Sunway, call warrants. However, you can switch from C44 to 51 because you have made money, and also you want to choose something that fits your portfolio better. Okay, so looking at C51, it has a closer exercise price and warrant price at 8 cents. So you can actually now compare. If you still hold on to Sunway C44 at 12 cents, right? Compared to 8 cents in Sunway C51, in the case of one big movement in the warrant, like half a cent, then you know that Sunway C51 actually translates to a bigger gain compared to Sunway C44. Yeah, so this is what we call you have to take profit, or maybe you want to roll your profits only, just take back your capital. Like on the other way around, you can just take 40,000 from the whole thing, the exit value 77K, right? Just take 40K. So this is your principal, and then the rest you can actually reinvest into another warrant as well. Yeah. So scan this and sign yourself up for our email newsletter. We'll be we'll be sending you. We won't be spamming you, but then we will be sending you some of the updates in the market. Yeah. Okay. So this one allow me to share a bit on RHB Morning Kappa at 8. So this is actually an initiative by RHB Investment Bank that you can actually join our Facebook group, and then you will get daily updates on the market from our analysts, from me as well, every day morning at 8 a.m. So if you have time or you are stuck in the jam, so just join us by scanning this code, then you will be able to get there. All right, so thank you so much. I'll pass the floor back to Shane, and then I think we are ready for some Q&A. Thank you.
All right. So of course, if you have any questions to ask us, you may write your question in the Q&A box. Yeah. I think I saw from the chat box to ask, Vanessa, what do you mean by switch? Just now you mentioned a couple of times, right? Switch. What does it mean?
Oh, sorry, looking for the unmute button. So I mean, switching is that you sell your old one and to buy a new one. So it's like you change phone lah, like you sell your iPhone 12 and then you actually buy an iPhone 17. Yeah, so that's what we call switching from the old one to a new one.
All right. There's person asked, Michael asks, how does REIT company pay dividend in the coming February or March, right? Since the withholding tax 10% has ended, the company cannot withhold 10% from dividend, right? Yeah, that's a good question from Michael. The answer here is I also don't know. Okay. Yeah, better ask the REIT property manager. So I also don't know. Everybody is waiting for the guideline. So how are they going to do when there's a void in this period, right? Um, I have no idea. Okay. Okay, the next question from I think there are a lot of questions for you, no, Vanessa. Okay, so let me pose those questions to you. Okay, so the next question is, what is so special about RHB Warrant?
Wow, this guy is giving me chance to promote myself. Promote RHB Warrant, is it? Okay. Yeah, all right. First thing first, I think for issuers, right, it's very important for us to have a very transparent pricing. Yeah, so in this case, right, RHB Warrant, we definitely have a strength where we actually have this Warrant website that is live. Okay, like it's not like live, but then there's a slightly delay in the feed, about 20 to 30 minutes. However, you can actually use this to sort everything. And when I mentioned about price transparency, the price metric is the one that I'm talking about. Yeah, so for you as an investor, you know what is the price for IJM. For example, like SB Mart, you know that, oh, when the mother share is at 3 ringgit and 90 cents, your warrant should be there queuing at 10 cents and 10.5 cents. Yeah, so I think this is one of the strength of our HP warrant. And second, I would say that our pricing is actually very competitive. If you are an experienced investor, then you know how to actually compare on implied volatility for all this warrant pricing. Then if you use the warrant search function, then you can actually add a filter for implied volatility. You'll be able to see that RHB Investment Bank, we actually price our warrants relatively, I would say, quite competitive in this case. Yeah. And last but not least is that you can easily reach out to me. Yeah. So yes, actually we have this. Okay, let me show you.
Hotline, is it? Oh,
Yes, hotline. Yes, hotline. This one, contact us, then you can actually call me at 0392002185. So if you have any question, you have a little bit of feedback or complaints, then you can actually reach out to us. Yeah. Thank you.
all right. So the next question is, how do you choose which warrant to issue?
Oh, okay. Wow, this is a good question. Okay, so how do we actually look for what kind of warrants that we can issue? right? You can actually look at this list, then you actually find a similarity. Is that first thing for local stock warrants, we have to issue stocks that's above 500 million market cap. 500 million is the minimum, and then it has to be listed on main market. So ACE market, even though it's 1 billion, also we are not able to, we cannot issue lah. All right. And then secondly is that we have to look at the warrants underlying, which means that uh, I think our team will actually perform an analysis on all these counters, and then we think that it actually aligns with the market momentum, market perspective as well. And then we'll actually look into subsequently the liquidity of this warrant, of these underlying shares, to see whether it's liquid or not. So if we see we see sufficient liquidity in this underlying share, then we will actually proceed to issue a warrant that fits all the criteria.
Mm.
Yes. So it's interesting when people say that, oh, now you can actually use a very cheap price to invest into blue chip stocks and also all these KLCI component stocks, because it's just like less than 20 cents. You can already have some exposure on it.
All right, Vanessa. So the next question is, do warrants suffer heavy decay if the underlying moves sideways?
All right. Okay. Yes. Yes or no. Okay. Yes and no. The answer is yes and no. So you have to see when do you mean by decay? If it's like the last month, then you actually see the warrant value decay faster than before. Okay. So how do we actually look at it? You can go to this warrant website, go to warrant details. Actually, you can actually filter on the time decay data, or you can just go here and then you be able to see data over here. So this number, ringgit minus 0.0003, will be the daily decay for this specific warrant. So in the case of more market moving sideways, right, your warrant will definitely suffer a bit of decay if you never sell it. So in the money warrants will suffer slower decay compared to out the money warrants and out of the money warrants and also at the money warrants. Yeah, but those cannot, if it's already the last month of trading, then also will decay very fast. Yeah, so what you need to do is that to use the website and check on what is the decay value. Yes, but all warrants will decay lah, that's for sure.
Yep.
Mm.
Um, there are a few questions on effective gearing and sensitivity, right? Can you explain more about that? And is sensitive warrant better or
Oh,
high
okay,
gearing warrant better? High gearing better
okay.
or sensitive better?
Yes, always get this question. Okay, since we are on this page, we are on the same page, right? Shane, 99 Smart C27. Okay lah, yes, I think so. Okay, so in this case, you look at effective gearing 5 times and also sensitivity at 3.5 ticks. It's actually very hard for you to picture how much do I have to use my calculator to count times 5 times, okay, times 5 or times 10. Okay, what is very easy is that you scroll down, you'll be able to see this metrics as I keep mentioning. Wow, metrics very important. Metrics is very important. Is that because metrics we're going to show you sensitivity and effective gearing. Okay, so for sensitivity means that how fast it moves. Like for example, 3 ticks means 3 ticks, 3 steps in the mother share, and then the warrants will move by 1 step. 11 and a half become 12 cents. Okay, then this is 4 ticks. 1, 2, 3, 4, and then your warrant price will move already. This sensitivity is for you to determine whether it's fast or slow. So it's going to reflect faster to the mother share price, or it's going to be slower. Yeah. So when you see if we look here, okay, if we compare these two, public bank and CIMB, then you notice that the price for public bank move faster, quicker, because 3 ticks only, right? But this one is 4 ticks and 5 ticks. So this is for investors who wants to do an intraday trading and have lesser patience. You want to scalp for 1 tick and then you run away, and then you can look for warrants with lesser ticks of sensitivity. But if you are an investor with very, very gung ho, you are very aggressive, you have time and you have patience to wait for a bigger, a bigger gain in your warrant, then you can actually go for warrants with higher effective gearing. So higher effective gearing, we use this multiplier lah to represent. It's actually very easy if you use the multiplier, right? I compare 99 smart, right? This one is 54 cents. Imagine 1% move in from 4 to 404, right? It's actually 1%. It's going to move your warrant is going to move from 53 cents to 54 cents only. So imagine 1 cent over 50-cent warrants is very little. But if you look at Nadia's Speedmart C27, right, the effective gearing is 5 times. So means that from 4 ringgit to 4 ringgit and 4 cents, about 1% change in the mother share, then you actually see the warrant move from 11.5 cents to 12 cents. So it translates into a bigger gain. So effective gearing can go for those investors who actually expect a bigger movement in the underlying share. Yeah, so I can't say which is better, but the best would be it's effective gearing is very high and also it's very sensitive. Then it will be the best for um for the investors who actually stays on the market and monitor closely. Yes.
All right. So the next question is by Yup. Is there anything I can do if a banker does queue out the volume for structured warrants rather than just wait there?
Where's the? Let me see first. Is it in Q&A?
Yeah, in the Q&A. Yep.
Does Q out the volume for rather than? I don't really understand his question.
Yeah,
Let
maybe
me let me
Wei Chen
think.
can clarify a bit.
Okay. Wei Chuan, I think Wei Chuan have to put in another explanation
Yeah.
on this
So
question.
so
Sorry.
Vanessa can get your question better.
Yes,
Let's
but
move on.
yes,
Yeah,
but Wei Chuan have
Michael.
to put a new one. Okay.
Yeah. Michael would like to ask, how do you, like issuers like you, determine the issue price of warrant?
Okay. So just now I have actually shared this page on. Okay, I have shared the page of how do we actually price our warrants, right? The warrant pricing model, which we use the Black-Scholes. Okay, so we also use this um, very complicated formula to put in, and then we just plug in we just put in the strike price. So what we will determine is that what is the strike price of the exercise price for the warrant, expiry date, exercise ratio, and also and also interest and all. But then what we will also determine is that the volatility of this underlying. So all of this group all together, and we will have this issue price. But if you actually see on Bursa Malaysia every morning, right? On the first day of issuance, you will actually see the warrant price is at 15 cents. So this is a standard. So on the book, it's like 15 cents. Yeah, but then we actually have issued, for example, this one we want to issue around 8 cents warrants, around 8 cents, but on the day of trading, then only we know what is the underlying price. Then we put in, and then maybe it will move a little bit now. Yeah, on that case. So in that case, we actually use the formula to determine the bid price of the warrant, and then we actually sell it on the market. Yeah.
Mm,
And
okay.
for future fluctuations, it's actually based on the underlying price lah.
Okay. Um, Wei Chuan has given the clarification. I think what he means is that if the market makers don't put the buy queue and the sell queue, right? What can retail investor like him do?
Oh, I think the first thing he has to do is that to contact, to call, to call the issuer. That's for sure. Yeah, 1K,
Yeah.
2K, I think is 100,000 at buy sell queue. If that's not, sometimes it happens when there's some technical glitch. That's for sure. And secondly, maybe if you want to you want to confirm on this, then you have to go to the price metrics and see whether if there's any spread. Maybe you think that there's actually this, but there's actually spread. Or on the other hand, is that sometimes you don't see the buy queue. Is that warrants is already out of the money and has no more value, so it's 0.0000 ringgit, right? Then there won't be any buy queue from the issuers as well. Yeah, but if you think that this is abnormal, is wrong, then you have to contact the issuers as soon as possible. Take picture lah, snapshot, and ask questions. Yeah, it will be better for you. So if you have photos, you have screenshots, then it will be easier for you to ask question. Then the issuer will actually can answer you more accurately. Okay.
All right.
Mm.
So we have come to the end of this webinar. So thank you everybody for tuning into this session brought to you by Wellford in collaboration with RHB. Hope that you gained some insights into the market today and how do you use warrants to trade the market volatility in 2026. So thanks, Vanessa, for having
Thank you,
us here.
Shane.
So hope to see
You
you all
too.
again in this
Me
session.
too. All right. Thank you, everyone. Thanks for
Okay.
dialing in.